discussion as well is Jane Foley, Rabobank Head of FX Strategy. Jane, great to speak to you, especially on a Wednesday early morning. When you look at dollar dynamics, Jane, and actually when you look at some of the growth forecast, is the infrastructure bill a real boost globally, or is it already, for example, priced in dollar?
Well, of course, when we talk about the amounts that were passed last night, some of it was already passed. So it's only around about half of the amount that we see headlining that is actually new spending. Now, of course, this has been talked about really for a very long time. So I think to a large degree, much of this is in the price. And of course, we do know that we've still got a number of hurdles on the way. Now, Democrats, of course, have immediately gone and talked about another fiscal bill, much bigger fiscal spending bill. Republicans already pushing back upon that, saying that it's a lot more radical. There's a lot more social agenda in that one. So there's a lot still to come in terms of fiscal noise, fiscal bills, etc. in the US. All of which, if it is passed, could be really very substantial in terms of a growth boom, not just to the US, but really to the global economy as well.
Yeah, and Jane, you're absolutely right. I mean, there's still a lot of hurdles as, of course, the infrastructure bill now goes onto the House. How much of it is actually priced in dollar right now?
I'd say a fair amount, but it is quite interesting if we look at the dollar. I think what we've got to really get past is today's CPI data, and I think even though the fiscal noise is huge and the amounts that we're talking about are really significant, I think for this summer at least, the real big focus is on the Fed. It is on tapering, and even though the fiscal amounts are really huge, I think really that is playing second fiddle really to the Fed at this moment in time. So we need to get the CPI out of the way, we need to get Jackson Hole out of the way, and perhaps we need to shift into the market's focus into the autumn FOMC meetings to see whether or not that there is a move on tapering then. And I think the fiscal packages have got to be seen in that broader context, but certainly they are supportive, have been supportive, and will continue to be supportive for growth if we do see more progress, particularly on this second fiscal bill.
But Jane, why has it been so difficult actually to predict inflation?
Well, I mean, clearly we're in very unpredictable times. Now, there's a few elements, I think, to inflation. And first of all, I think everyone agrees, we've had these supply side shortages, we've had commodities that are being bid up. And we all know that there are base effects in some of these. What we don't know is whether or not we have this change in dynamic, this post-pandemic change in dynamic. And a lot of that will come down to whether or not there's going to be a boost to wages, or at least a sustainable boost to wages. And it's too early to tell because, for instance, if we think about it, if we have just commodity price rises or costs going up and wages stay the same, well, that's going to eat a hole in people's pockets and have less money to spend on everything else. And ultimately, demand will go down and therefore inflation will go down. However, if we have wages rising as well, that's where you get this demand dynamic potentially picking up. That's what central banks will react to. And we just don't know whether or not the higher inflation that we've seen in some sectors, whether or not it's temporary and workers come back online and we get this suppression of wages, or whether or not actually it's going to be more permanent. And that's the test. That's we just cannot fully answer that question yet about the permanence of wage inflation.
Jane, what's the most interesting currency pair right now? I mean, our Mark Cudmore was looking, for example, at the broader trade-weighted euro, which significantly underperformed, actually, for example, euro-dollar, which again is probably an indicator of how important some of these QE expectations are on G10FX right now.
Yeah, I think you're right. I think if we had to just talk about one thing, I think we'd be talking about central bank expectations. And I think, we've got to think also about not just tapering and not just quantitative easing, but we've also got to think about the short end. And that's why I think the Fed's June FOMC was really very important for the dollar, because it threw attention onto the dot plot, it threw attention onto the Fed's funds rate, it put it out there, that question, that debate about, is the Fed potentially going to hike interest rates a little bit earlier than we previously thought? That's really important for currency markets, and that debate is out there with respect to the dollar. And data over the next few months is really going to tell whether or not that debate has got more legs and whether or not the Fed could hike a little bit earlier than expected. That's really important, I think, particularly for the foreign exchange market.
Jane, thanks so much. Jane Foley there, Rabobank Head of FX Strategy, stays with us. Now, coming up,